Welcome everyone, this is TianKriek and I am your host for today's Trading Room session. Thank you so much for joining. Today is Wednesday, the 16th of October 2024. Can I please just confirm that everybody can hear my voice and see the welcome screen? Okay, excellent. Thank you. Thank you, Sandra. Thank you, Jewel and Reach. Thank you so much. Right, so before I get started with today's session, I need to make mention that I am not a registered financial advisor, which means I can point out to you where I personally would want to buy and sell, but the actual trading decision you're still going to have to make yourself. Right, so let's get started. We don't have a lot of fundamental announcements on the calendar today. We did have import and export prices, those were mixed. We did have some housing figures from Canada, those were mixed as well. Tomorrow, we have unemployment from Australia. We have inflation from the European Union, and then also the European Central Bank interest rate announcement. So expect a lot of volatility tomorrow, Thursday. And then we also have from the United States retail sales, as well as jobless claims. So that's going to be a big one as well. It looks like we have, no, that's all. Okay, so the European Central Bank, US retail sales and jobless claims coming out tomorrow from the United States. Just quickly, if you go to my website, TianKriek.com, I just want to make sure that you understand that if you type in your email address at the subscribe to my newsletter section here, then you don't become a member, you just have access to the newsletters. If you actually want to sign up for the trading course or the trading room, you're going to have to click on join now, and then you'll get the prices here. You can go for a monthly or a yearly package. You can also book me for private sessions. Okay, hourly private sessions. There's a calendar where you can book me for that as well. And then I have created a Telegram channel, and the Telegram channel, I'm going to add it here under the Access the Trading Room. So if you click on Access the Trading Room and you log in, you'll be able to see the Trading Room link, the Zoom session, as well as a link to join the Telegram channel. Thank you to everybody so far for your feedback. I really appreciate that. So let's get cracking with today's session. Right, so also what I did was Monday's session, I briefly explained the RSI, and I took the recording for that Zoom session and I added it in an additional subsheet in my directional insight spreadsheet. It's called Educational Highlights. So whenever I explain something, I will add it here in the form of a recording, a link to the recording of the previous session, whatever I have explained. Hi there, Tom. Right, so on Monday, I didn't have a lot of time to update all the currency pairs, but I think once it is all updated, then it will be faster. So what I am going to do today is I'm going to try and update all the currency pairs. But let's just go through the indexes and the currency pairs that I have updated on Monday. So let's get started with the dollar index. Right. There we go. Dollar index bounced against pivotal support. Also bounced against the backside of this falling wedge. And the US dollar is likely going to continue to strengthen because it has been in a bull trend since 2008. And we've now bounced against the backside of the falling wedge, and the market moved above the 45 period exponential moving average. So that is bullish. I did mark the dollar index bullish on Monday because it's above the 45 period exponential moving average. Then if we have a look at momentum, momentum is bullish, volume is bullish as well. I do see that the RSI is overbought. So at some point, I do think that we're going to get a retracement because of the overbought RSI. I did mark this one as being overbought. There we go. Jewel, the spreadsheet, if you go to the website, TianKriek.com, then on the front page, you will have an image here that says access the directional insight sheet. So you can click on that, and then the sheet will be there. Okay. You can sign in. Let me sign in quickly. Type in my email address. So if you want to sign in, you just type in your email address. Okay, then you're going to get a link in your email. Then you click on that link. Or I could just copy and paste it in my browser here. There we go. And now I'm signed in, and then you will be able to see the spreadsheet. Okay. And as I update the spreadsheet, it will be updated on the website as well. Let me know how this works for you. But it's like an embedded sheet in the website. All right. Okay. Again, all feedback is appreciated. All right. So relative strength, the RSI, we overbought in the dollar index. And then what did I say about the fib? There's no up fib on the daily chart. The probability is bullish. I want to be looking for an up fib, but there's a death cross with respect to the 377 and 144 period exponential moving average. So I can't really draw an up fib here. And then I looked at the 1 hour chart as well on Monday. I said there was no 382, and we are below the 127 extension. It just makes it a bit risky to be looking for a trade. I really think that it's a good idea to just wait for a retracement on the dollar. There's the up Fibonacci AB boundary. We don't have a 382. The market's still below the 127. So if it does move above the 127 extension, then we're going to go much further on the dollar index, all the way up to the 2.618. So 1 second. Right. So in my opinion, the 1 hour chart is not aligned. And therefore, I'm not going to deploy any automation. I'm not going to take a manual trade. And the note that I made here is let's just wait for a retracement on the 1 hour chart, especially now that the daily RSI is also overbought. Okay. Right, let's go and have a look at the Australian dollar index. Sentiment. I think it's a good idea to have a look at sentiment because for the past month, the dollar index sentiment has been bullish. Dollar index still 70.61. That is bullish indeed. Interesting. Okay, sentiment remains bullish. So there is no change from Monday's analysis on the dollar index. I'm still going to pass on that one. Let's see what we have from the Australian dollar. This one is now officially bearish. We bounced here against the consolidation resistance, and the market moved back inside the boundary of this consolidation range because it actually moved just slightly above that consolidation resistance. And today's daily candlestick actually opened up below the 45 period exponential moving average. So this probability is bearish. Okay, so I can update that one. And then momentum is still slightly bullish and neutral, and volume is bearish. Then the relative strength index, like I explained on Monday, we have the median line, which is this dotted line over here. If the RSI is below that line, then it's going to be bearish until we hit the oversold level. Okay, so that is bearish as well. So now that the probability is bearish, maybe I could look for a sell on the Aussie basket. Sentiment was neutral when I had a look at that on Monday. Where's the Aussie? There we go. Still neutral, 59.75. Daily fib wasn't applicable because the probability was neutral. But I see that there is a golden cross. It's not worth it looking for an up fib here. Because your next support is going to be the consolidation support there. I'm not going to worry too much about that. Okay, that's not applicable, and therefore the 1 hour fib. Let's see if I can draw a down fib on the 1 hour. Okay, so there is a death cross. No 382 retracement. And that means the D extension is going to be the 2.618. So the 1 hour chart is aligned, considering that it's moved below the 127 already. Look at that. Okay. So that is bearish. I think I'll just call that a yes. All right, deploy automation on the Aussie basket. I think I'd look for a manual trade and look for deployment. Even though momentum is neutral and sentiment is neutral, we can go and have a look at the Aussie basket. Large consolidation. Support. Okay, so the note here is that price is moving to large consolidation support. We're below the 45 period exponential moving average. Expect continued bearish movement until we hit that consolidation support. Hi there, Scott. Thank you for popping in. Much appreciated. Okay, so that's the Aussie. Then let's see what we have from the next one, which is the Canadian dollar. Canadian dollar, there has been an uptrend also on this one, but then the market started to consolidate and formed a triangular formation. It broke the triangle to the downside, came back, tested the backside of the triangle, and then also moved below a pivotal support here at 55. Should be at 5500. And look at that. Yesterday's daily candlestick closed above it. Today's daily candlestick opened up above it and already tested it. So it's still below the 45 period exponential moving average, but I'm going to call this one neutral because we're stuck between support and resistance. And because of the Canadian dollar following the US dollar, if the US dollar continues to strengthen, the Canadian dollar will follow and will eventually start to strengthen. Here's the indexes. This is what we have from the US dollar and the Canadian dollar. You can see that the Canadian dollar has been following the US dollar since a couple of days ago. And then let's see what we have from the strength charts. Swiss is weakening. The dollar and the Canadian dollar is actually the strongest. The pound weakened a lot today because we had some bad fundamentals from the UK. Since then, it's been coming back, but expect the pound to continue to weaken. And then, yeah, that's about it. So back to the Canadian dollar index. We're back to neutrality on the Canadian dollar. Momentum's bearish and volume is slightly bearish here. RSI is also bearish because we're below the 50 line. So I can update that. And then sentiment. $75% short. Well, we also have a down fib. I saw that I used the arrows on my fib, so I'll just do that as well. The daily fib was bearish for what that's worth. Oh, okay, yes. There's the down AB boundary. We have a 618 retracement, and there's the D extension. So if the Canadian dollar should weaken, then or continue to weaken, then it will move towards that D extension. But it is now neutral, and a Fibonacci AB boundary is actually not applicable if the probability is neutral. So I think I'm just going to say here that it's not applicable. Right. And then the 1 hour fib is also not applicable because we're neutral. There's no deployment necessary on the Canadian dollar basket. Right. The stringiest. Yeah. The strongiest or the stringiest. That's funny. All right. Next one is going to be the Swiss. The Swiss franc is weakening. The market has been consolidating. It recently bounced against consolidation resistance. And now we are below the 45 period exponential moving average. So I can call this probability bearish. It looks like momentum is bearish. Volume is slightly bearish. The RSI is bearish. Interesting. Look at that. I see I don't have a date here. I need to add a date. All right, let's go and have a look at sentiment. 64.35, that's neutral. Can I look for a down fib? Not really, because we're still in a golden cross situation, and therefore I've drawn an up fib. But that's not applicable at this point due to the fact that the probability is bearish. I'm not going to look for an up fib here. So that's not applicable. Maybe we could look for a down fib on the 1 hour. Okay, what's going on here? We actually have a new death cross. Oof. That's a difficult one. Okay, anyway, I'll use the high over there and then draw the fib to the first fractal low after the death cross. So there's the down AB boundary. It looks like we have a very deep retracement at the 8.6 retracement level. So if it's going to retrace 86% of the AB boundary, then it is likely going to extend 118% of the AB boundary. So there we go. It is heading down after it's now retraced. So the D extension is going to be the 1.18 extension over here. And that means the 1 hour chart is bearish and it is aligned. Look at that. I'd go for deployment on the Swiss basket. I'd be trading Swiss weakness here. That means going long Canadian Swiss, going long dollar Swiss, going long pound Swiss, and so on. Very cool. Then we have the pound index. The pound weakened a lot today. Let's have a look at the UK fundamentals that came out today. There we go. PPI, inflation, core inflation, all of that came out lower than expected. Inflation is dropping in the United Kingdom. The Bank of England is likely not going to be overly hawkish. That would mean weakness on the pound. The probability on the pound index has been bearish. There we go. And I've been following this rising wedge pattern. The market's broken the rising wedge to the upside. It's now come back inside the channel or the boundary of the rising wedge. Today's daily candlestick that moved below the 45 period exponential moving average. I'd like to see it close there. So just keep an eye on that. And then momentum is bearish, volume's neutral, and the RSI is actually bullish. Look at that, it's moved above the median line. So I think let's just wait for the daily candlestick to close on the pound. Let's wait for a daily close below the 45 EMA. Pound sentiment is neutral as well, 58.41. And I don't think there's a down fib that I can draw on the daily chart because the most recent cross is a golden cross. So let's see what's going on with the 1 hour chart. We have a golden cross on the 1 hour chart. Look at that. So I need to be looking for a down Fibonacci AB boundary. I can't really do that if there's a golden cross. So that means the 1 hour is not aligned. And that's a no. It looks like we got to wait a bit. Okay, then next one, New Zealand dollar. New Zealand dollar, we have consolidation. There's no trend here. What basically happened is that the market was making higher lows and lower highs, which means it formed a triangle. The triangle was broken to the upside, but that ended up being a false break. I think it sucked a lot of people in with buy trades here. That was a false break over there. Either way, let's move back inside the channel of this triangle. And I think it's moved below the 45 period exponential moving average already. There isn't a death cross on the moving averages, so I can't draw a down fib, but I can call the probability bearish, which I did on Monday. All the indicators are bearish, volume, momentum, and the RSI. So that's bearish. Even sentiment was bearish on Monday. And it is still bearish at 73.38. Daily fib can't draw that, but I can look for the 1 hour chart and see if I can draw a fib there. And there is a down fib. Here we go. There is a down fib on the 1 hour chart. No 382. We've moved below the 127. And because there's no 382 and because the market moved below the 127 extension, the probability remains bearish on the 1 hour, and we're heading to the 2.618. So expect the New Zealand dollar to continue to weaken. I've marked this one a yes. So I'll continue looking for selling opportunities on the New Zealand dollar basket. Then let's see what we have from the Japanese yen. Okay, so the yen is still weakening. There is a bullish crown formation over here. And I think the market is heading towards the right tip of the crown because of this smaller bearish crown that occurred before that, and it's below the 45 period exponential moving average. So that immediately makes the probability bearish. There is a down Fibonacci ABCD swing. Look at that, down ABCD. There we go. That's the down AB boundary. Then it retraced the 382. Now we're heading to the D extension. So the daily fib is also aligned. So that's all bearish. All the indicators are bearish. Look at that. Momentum is bearish. Volume is bearish. And the RSI is bearish as well. It's below the 50 line. Sentiment is still neutral at 59 and 41 or 60-40. So the daily fib is aligned. Let's see what we have on the 1 hour. Okay, so there's the 1 hour chart. A down Fibonacci AB boundary, no 382. So if the market moves below the 127, then it will continue falling to the 2.618, and it looks like it's been hovering around this 127, and it hasn't broken it yet. It looked like we had a bit of a triangle going on here on Monday, but it looks like that's now ended up in failure, unless we've got a bigger one going on here. Either way, I'd like to see the yen move below the 127 extension before I call the 1 hour chart aligned. So the 1 hour chart is not aligned. In fact, it is neutral. So I'm not going to deploy any automation or take any manual trades on the Japanese yen. Remember, I went long on the Aussie yen on Monday with a manual trade, and that trade got stopped out. So the yen is not applicable for any trading at this point. I'd wait for price to move below the 1 hour fib 127 extension. Sandra, yes, that trade got stopped out. Yeah, that I risked 1% on that trade. It got stopped out, and that's it. And after it got stopped out, the 1 hour chart wasn't aligned anymore. So I'm not going to take any more trades. If I was deploying any EAs on that, I would also disable any deployment on that. Okay, so that's the indexes. So what can we see? The dollar is still slightly bullish, but it's overbought. So I think I'll pass on the dollar basket. The Aussie basket, I'd like to sell. I think we need to have a look for opportunities on that. And then the Swiss basket, I would like to sell. And then the New Zealand dollar basket, I'd like to sell. So I think to save some time, I'm not going to go and update all the currencies in alphabetical order. Let's focus on these groups here. And then if there's time left, then I'll update the rest. What do you guys think of that? Sounds like a plan. All right, let's go do that. Right, so let's start with the Aussie index, the Aussie basket, Aussie CAD. I need to be selling the Aussie CAD if the Aussie basket is going to weaken. And I called the probability bullish on the Aussie CAD on Monday because we were above the 45 period exponential moving average. I'd only be looking for a sell here. So let's see what's going on the daily chart. Ooh, tremendous weakness on the part of the Aussie CAD today as the Aussie is weakening. We've moved below this pivot at 92.50. I did mention that we're going to be neutral below 92.50. And then I can add to that and say that if the market moves below the 45 period exponential moving average, then we're going to be bearish. So this is a valid bearish crown over here. It looks like the market just came back for the right tip before we head down again. So I wouldn't mind looking for a sell on the Aussie CAD, but we need to wait for the daily candlestick to close below the 45 EMA. Momentum still neutral. RSI still above the median line. So maybe I think we should give this another day. Wait for a close. Candlestick close below the 45 period exponential moving average. Aussie Swiss. The Aussie is weakening, as well as the Swiss franc. And when we have both indexes weakening, then the market is likely going to consolidate. And it's not a good idea to trade these against each other. But for interest sake, let's see what we have on the index here today. Which one was weakening at the fastest pace? So there's the Swiss franc, there's the Aussie. The Aussie is actually weaker than the Swiss. Let's have a look at the Aussie Swiss here. See, moved below the 45 EMA. I'd pass on that. You know, I don't want to trade Swiss strength in any capacity. Because the Swiss National Bank could intervene at any point. So I would pass on that. Okay, I'm not going to trade the Aussie Swiss. I'll call the probability bearish, but I'm not going to trade the Aussie Swiss here. Let's make a note here. So the note here is that the Aussie and the Swiss indexes are weakening at the same time, which means consolidation. It's just going to be a frustrating exercise to trade the Aussie versus the Swiss franc. Okay. All right. If I write it like that, does it make sense? The Aussie and the Swiss, both of them are bearish. Okay. And if both of them are bearish, then we may see consolidation. So you're likely just going to get stuck there. So I'd pass on that. Then the Aussie yen. Let's see which one was weakening the most today. See, the Aussie is even weaker than the yen. So I don't think I'll trade the Aussie yen. The probability is bullish now. The market is above the 45 period exponential moving average. And there is an up fib. There's actually quite a big up Fibonacci AB boundary here. There we go. That's the A. That's quite a big one. That is suggesting that the market is likely going to continue trending up in this up channel until it eventually hits that D extension. So I do think that we will see continued yen weakness on the cards. So at some point, the yen will weaken at a faster pace than the Australian dollar, but I don't know when that's going to pick up. So I think at this point, I'll pass on that. See, look at that. Momentum is still slightly bullish, but volume is neutral, be below the dead zone line. The RSI is bullish. Let's see what's going on with my FX book sentiment. Yeah, neutral 56.44. The daily fib is still bullish. And we have a death cross on the 1 hour chart. So I can't even draw an up fib on the 1 hour. Okay, there's no trade. There's no trade on the 1 hour chart. This is a no. And I'm going to say, yeah, that the Aussie and the yen indexes weakening at the same time, which could spell consolidation. Aussie NZD, I called this one bullish. So let's see what's happening with the Aussie NZD. The Aussie is weakening. The Aussie index is weakening. The New Zealand dollar index is weakening. You know, trading them against each other is not a good idea. Let's see what's going on here. There is an up Fibonacci AB boundary. The market is consolidating. It looks like we're heading to consolidation resistance. So over time, we'd see the New Zealand dollar weaken at a faster pace than the Aussie, for the pure reason that the market is still above the 45 period exponential moving average. But now it looks like there's a pivot at 1.1050 and the market's moved below that in the meantime. So I think I'm just going to call this one neutral. Okay, so the Aussie and the NZD indexes are weakening at the same time. And when the market is consolidating like this, we can't really believe anything from the indicators, but momentum's bullish, volume's neutral, the RSI is bullish. Huh. Actually, look at this. The RSI moved into an overbought condition, and then it crossed the signal line to the downside. Okay, which means it could retrace. Okay, I'm going to call that RSI bullish. I mean, if the RSI is above the 50 line, but it's also above the signal line, then yes, I'll call it bullish. But then if it becomes overbought and it crosses the signal line, then we're going to retrace again. Okay, so at this point, I'll call it neutral. If it moves below the 50 line, I'll call it bearish. So Aussie NZD, relative strength is neutral. I'm not going to bother with sentiment. I'm not going to bother with the fibs. I'm just going to pass on that. Actually, let's just see for interest sake what's going on with the 1 hour fib. Yeah, we also have a death cross on the 1 hour fib. No reason to be looking for a fib here. It's not applicable. Right, Aussie US dollar. The dollar index isn't aligned. That was my note on Monday, but I think let's just update the Aussie US dollar for the sake of analyzing it from scratch and looking at the probability. Now, obviously, the dollar index has been strengthening. So that's why the Aussie US dollar is bearish. And this probability is bearish. We're below the 45 period exponential moving average. There is a down Fibonacci AB boundary. The market did retrace to the 618, so the D extension is going to be here at 59, where it forms a confluence with a round number, which means at some point we're likely going to see the market break out of this triangular formation and start waving down towards that D extension. All the indicators are bearish. Sentiment also bearish at 15% short. Daily fib is aligned. There's a down ABCD swing. Um, 1 hour chart. There's the down fib. There's a death cross. A down AB boundary with no 382. So there's no 382 there. And it moved below the 127 extension. So that means it's bearish. Okay, and it's likely going to continue bearish until we hit the 2.618. It's pretty close to that level, but I call the 1 hour bearish. Okay, but still, I'm not going to deploy any automation or look for a manual trade because the dollar index is not aligned. The dollar index is overbought. And if we see a retracement on the dollar index, then it means the Aussie US dollar will come back. So the objective here, or my intention, is to sell the Aussie US dollar, but not now. We need to wait for a retracement. Okay, so that's the Aussie basket. No trading opportunities on that. Let's see what we have from the next one, which is the Swiss basket. I'd like to go short the Swiss basket. So let's start with the first one. And I need to update the dates here. Right, let's have a look at the CAD Swiss. Again, I need to remind you of the massive bullish price pattern that we have here on the Canadian Swiss. It's a falling wedge, which suggests that we're likely going to see a big push to the upside as the Swiss franc weakens. It looks like the market will break that wedge to the upside. That wedge is a bullish pattern. Okay. So I'd only be looking for a buy trade here. I'd be trading Swiss weakness. And if we have a look at the Canadian dollar index, the Canadian dollar index is neutral. So the Canadian dollar index just needs to be consolidating and the Swiss index weaken, which means the Canadian Swiss is likely going to go up as the Swiss franc weakens versus the Canadian dollar. However, this one is not above the 45 period exponential moving average yet. It has been consolidating. It bounced. Yeah, I thought that it would come back to 62 figure, but that never happened. Next pivot is 63. So let's see what it is going to do at 63. I'd feel much more better if it moves above the 45 period exponential moving average. Then I'd be looking for a buy. But also when the market moved above 63. I do see that there's a bullish crown. I think I am going to draw it just so we can see how this one is unfolding. So this is the left shoulder or the left tip. That's the center tip. Then the market made a high, came back for the right tip over here, and now we're heading up again. It just came back for a second right tip, which is fine. That can happen. But yeah, that is a bullish pattern. Expect the Swiss to continue to weaken versus the Canadian dollar. But I'll be waiting for price to move above the 45 EMA, as well as that pivot at 63. Oh, that was the last note that I made. We bullish above 63 and the 45 period exponential moving average. Okay. Then the next Swiss pair is going to be the Swiss yen. But now we have the yen index that's weakening. We have the Swiss index that's weakening. So it's a bit risky. It's likely just going to consolidate. So the Swiss and the yen indexes are weakening at the same time. But let's go and see what's happening with the Swiss yen. Above the 45 period exponential moving average, but it bounced here against a pivot at 174. So we got to wait here. And it also looks like it moved below the up channel intermediate line, this blue line here. We've moved below that line. I do think that the yen is going to weaken versus everything else because the Bank of Japan, I think they definitely cut with, done with raising rates. But this is a bullish crown, and maybe it will come back and give us a deeper right tip before it goes up. So let's see what it will do here, if it will move below the 45 period exponential moving average or not. But I don't expect fireworks here due to the fact that we're below a pivot, but still above the 45 period exponential moving average. That's a pass. Then we have the Euro Swiss. The Euro index is also bearish. We have the European Central Bank on Thursday announcing interest rates. They expected to cut. The German economy is basically in a recession, almost in a recession. It's definitely stagnating. So that's going to weigh on the euro. And now we have a weak Swiss as well. So engaging in the Euro Swiss is likely going to be a frustrating exercise, as it is likely just going to continue to consolidate. So this is what we have on the Euro Swiss. In similar fashion to what I have seen on the Canadian Swiss, is I see a big falling wedge pattern, which is a bullish pattern. It is suggesting that we're likely going to see a breakout to the upside. So for some reason in the distant future, we can expect the Swiss franc to weaken versus everything else. And for that reason, I'd only be looking for a buy trade. You know, if I had to place a trade, I'd be looking for a buy on the Euro Swiss. But I mean, if we have a look at the price action here, it's consolidating in a triangular formation. It's bouncing against a pivot at 94, and it's below the 45 period exponential moving average. So it's got a lot of hurdles that it needs to move up. Mind you, I do see a bullish crown here as well. How interesting is that? Let's see if it closes above that pivot at 94, and then wait for it to move above the 45 period exponential moving average. But at this point, I think I'm going to pass. I'm just going to say that it's basically between that pivot at 94 and the 45 period exponential moving average. I'll just say this. Swiss and the Euro indexes are weakening at the same time. Indicator-wise, momentum is neutral because we have the dot plot that's slightly above the median line of the momentum indicator. There we go. Now I could maybe see that a bit better. You see the histogram is slightly above the median line, but the dot plot's still below it. So that means we're neutral. Volume's neutral as well. And the RSI is below the median line, which means it's bearish. So neutral, neutral, bearish. Sentiment. 23% short, so sentiment is bearish. Looking at the fibs, I wouldn't even look to trade this because we can't really draw a fib if the probability is neutral. So that's a pass on the Euro Swiss. The next Swiss pair is going to be the pound Swiss. The pound index is neutral at this point, but it is weakening. And the Swiss index is bearish. Let's see what's happening with this one. Oh, it bounced here against the pivot today at 1.12. Oh, and another wedge. Look at that. Falling wedge. The falling wedge is a bullish pattern. Expect the Swiss franc to weaken versus everything else, including the pound, even if the pound weakens as well. But I don't think that this probability is bullish. Oh, it is. Look at that. I didn't expect that. Look at that. Above the 45 period exponential moving average, it bounced here against 1.12 today. Today was violently rejected of that support. So this is still bullish. Well, I never. Even with a pound weakness. Momentum's neutral, volume's neutral, RSI is bullish. Sentiment Neutral, 49.51. Well, the probability is bullish. I can try and look for an up fib, but there's a death cross here. So that's not going to help. So that's not applicable. A fib. Can I make this heading sticky? Freeze. Yes, I can. Freeze the first row. Oh, look at that. You see? Now I can see the rows, the heading as well. So 1 hour fib. Yes, there's a golden cross. And this is that pivot where the market bounced off today, 1.12. There's 1.13, also a pivot. It looks like it is. And then 1.14. Yes, it is. Look at that. The market reacted against it over there, so that will be the next resistance. But there is a golden cross. So I can look for an up fib. That's the lowest low that the market made. First fractal high. After the golden cross, a 5-0 retracement. So the D extension is going to be the 1.618. At 1.1364. So the 1 hour chart is aligned here. That's bullish. Well, if you want to trade the pound Swiss, I mean, there it is. It's bullish. It's heading up towards resistance. The pound is weakening. The Swiss is weakening. So you may get stuck. It's not the best currency pair to trade. But if I absolutely had to place a trade, it would be a buy, or at least just deploy automation in a bullish capacity. Target is 1.1364. But I'm going to pass on this one. I mean, not everything is aligned, and I mean, it's not the best one out there. So I won't deploy anything, but if you want, there's the target. I'll say here that price is next target 1.1364. Okay. Then the NZD Swiss, that's the next Swiss pair. We have the New Zealand dollar index that's also bearish. Oh, don't forget about this big falling wedge again. I'm seeing this across the board, across the whole basket, across the whole Swiss basket. Eventually, we're going to see some serious Swiss weakness. And as a consequence, the market's going to break these wedges to the upside. So if I had to trade, I would only be looking for a buy. It looks like the Swiss would be weakening against everything else, even if that else is also weakening. But look at this. I mean, the market's below the 45 period exponential moving average. It bounced against a pivot at 52. So it's simply just consolidating. There's no trend here. There's no reason to go and trade anything here at this point, unless you want to just place a buy and wait it out. But it's stuck between the 45 period exponential moving average and a pivot at 52. And that's a no. Not worth looking at the fibs because it's consolidating. Momentum's bearish, volume's neutral, RSI is bearish for the what that's worth. And then sentiment. 23% short, so sentiment is still slightly bearish, yeah. Okay, then we have the US dollar Swiss. We know that the dollar is strengthening, the Swiss is weakening, the dollar index is bullish. Yes, it's overbought, but if I absolutely had to, I'd be looking for a buy on the dollar Swiss. It'd be nice to just get a retracement because, money is made when we buy low and sell high, and at this point, the dollar Swiss is a bit too high to buy. Look at that beautiful bullish crown that we had here, and the market is heading up. I've taken the liberty to draw the Fibonacci's of the crown. We had quite a deep retracement. We hit the D extension of that crown fib, and the market's above the 45 period exponential moving average. I guess I can draw a new fib here. I mean, I can only draw the crown fib because there's no golden cross on the 377 and 144 exponential moving averages, but this one's kind of run its course now. So if I draw a fib here, it's going to be a sub fib because there's only a death cross, and this is a fib that starts with the with the crown fib. So that was the C, that was the D that was hit. There's the latest up AB boundary. There is no 382. That means the market needs to move above the 127. Oof, and look at that. The 127 extension is going to act as resistance because there's no 382. If it moves above the 127, then yes, I'll assume that it will continue bullish, but now it's going to be resistance. And it looks like it is bouncing there. It needs to retrace. The dollar index is overbought. I don't think it will come back to the 382 though. Anyway, I'll call this one neutral. Stuck between the 45 period exponential moving average and the 127 extension. This is basically a sub-fib. I just need to remember that. Let's see what we have from the 1 hour. Golden cross. No, 382 moved above the 127. We're heading up to the D here, which is the 2.618. So the 1 hour D is a little bit further away at 86.84. I mean, what's the verdict here? The Swiss is weakening, the dollar is strengthening. If I absolutely had to place a trade, then yes, I'd be looking for a buy. Just know that it may retrace a bit because it's overbought. But if you're willing to stick it out, it's bullish. There's no illusion about that. So the 1 hour is bullish. Actually, the daily fib is not aligned because the market is neutral on that one. And then, okay, let's just have a look at the indicators on the daily chart. Momentum bullish, volume bullish, RSI bullish. Sentiment. Neutral. 45, 55. Am I going to deploy anything? No, I don't think so. Reach the daily trading range. I prefer to use a different trading range. Let me just see if I can get it here. I'll see if I can create an indicator for trading view. Okay, let's do that. Ah, I do have it there. Okay, so US dollar Swiss. Let's add the TSR ranges. There we go. So I'm just going to zoom in on this. The average daily range is 50 pips on the US dollar Swiss because the previous daily range was 30. The past 5 days is 47. The past 10 days is 57. The past 20 days is 64. If I add them up and divide them by 4, I'll get to the average daily range, which is 50. Okay, so 50 pips. So if you go and have a look at the 1 hour chart, the D is at 84.84. And the market is now at 84.40, so that's 44 pips away, which is slightly less than the daily range, or the average daily range. So I don't know. It's like kind of squeezing water from a stone. No, I'd pass on that. I'd pass on that. Okay, so that concludes the Swiss basket. Unfortunately, there's nothing that's really standing out. So I'd pass on that. And then the other one that was a yes is the New Zealand dollar basket. Maybe there's something we can trade on the NZD. Euro NZD, if the NZD is weakening, then the Euro NZD should be heading up. However, the Euro is also weakening. So trading these two against each other may also end up in frustration as the simply just consolidates. But let's go and update that one. Euro NZD. Okay. Look at that, above the 45 period exponential moving average, but there's a line here, and I guess that is an intermediate line of some channel. Yeah, it is. Look at that. Here it is. We have an up channel here. And this is the intermediate line in the middle of the channel, and it's acting as a dynamic pivot or level of support and resistance. If the market is above it, it will act as support. If the market is below it, it will act as resistance. And at this point, the market is below it. I think it bounced against that level today as well. This one, this intermediate line. Look at that. It bounced against it today and also hit a pivot at 1.8. And at the same time, it is above the 45 period exponential moving average. So it's stuck between support, which is the 45 EMA, and resistance, which is now a confluence between that intermediate line and pivotal resistance at 1.8. So it's just neutral, it's consolidating, and we know why it's consolidating. It's because the New Zealand dollar as an index is bearish, and the euro as an index is also bearish. They're just weakening at the same pace. There's no trend. So euro NZD is a pass. So euro, the New Zealand dollar, and the euro indexes are weakening at the same pace. That is consolidation. Momentum's bullish, volume's bullish, RSI is bullish. So maybe we'll see the New Zealand dollar weaken more than the euro over time, but not at this point. We need to wait for a breakout above resistance. Sentiment is where? 29% long. So sentiment is bullish. Daily fib. We're consolidating here. Not going to worry about that. Am I going to deploy anything? Absolutely not. I want to trade something that's trending, not consolidating. Okay. Then we have, let's see. We have the pound NZD, and that's the same thing. Okay, the pound is neutral, but we may see a bearish probability on the pound tomorrow. Let me just say this one. I don't have high hopes for the pound NZD either. Yeah, pivot 2.150. We bounced against that today, and we above the 45 period exponential moving average. That's neutral. Stuck between support and resistance. Okay, pound NZD. Neutral. Momentum bullish, volume bullish, and the RSI is bullish. So maybe it will break to the upside after all at some point. Down NZD. Neutral. Sentiment is neutral. I'm not going to worry about the fibs because we're consolidating here. Deploy any automation. No. Then we have the NZD CAD. Now this is an interesting one. I'm excited about this. I'm excited about selling the NZD CAD because if the New Zealand dollar is weakening and the Canadian dollar is simply consolidating or strengthening with the US dollar, we'd see the NZD CAD fall. Okay, so let's go and have a look at that one. That may be one that we can engage in. So NZD CAD. Yeah, look at that. That's bearish below the 45 period exponential moving average, move below this pivot. At 84, I see a bearish crown as well. Nice one. Left tip, center tip, came back for the right tip, heading down. What else? Down channel. Okay. There's a pivot at 80 and 84. But the market's now moved below that after it hit the up fib de-extension. My goodness, look at this. That was the up A, the up B, then it retraced exactly to the 382 to go and hit the 1.618 exactly to the pip and then just came crashing down. And now the probability is bearish because we're below the 45 period exponential moving average. Okay, so this is bearish. This is bearish with the next pivot being at 8 figure. Hold on a second. $83. Looks like it could be a pivot. I'll keep that one in. The market is at 83.46. Oh, well, that is bearish. NZD CAD. Momentum bearish, volume bearish, RSI bearish. Sentiment. %26 short. Nice one. Can I look for a down fib? No, we don't have a death cross on the 1 hour. On the 344 and 144 exponential moving averages. So no, I can't. It's going to be not applicable, but I can go to the 1 hour and do that and see. NZD CAD. Oh, goodness. Now there's a golden cross. I need to be looking for a death cross because I'm going to sell it. Need to wait for a death cross here, folks. The 1 hour chart is not aligned. Can't deploy anything. Gonna have to wait for that. Wait for. Let's wait for a death cross on the 1 hour. Or wait for an H1 down fib. I know it's frustrating to wait for all these things to be aligned, but you know, I'd rather be out of the market than being in the market and losing money. So take this opportunity to learn the art of waiting. Okay, anyway, so that's the NZD CAD. Next one is going to be the NZD yen, but now the New Zealand dollar is weakening as well as the yen. That's going to be another one that's going to be a little bit painful. Yeah, look at that. Above the 45 period exponential moving average, but we've now broken this channel. See, there's an up channel here. Broken the channel to the downside, and the market hasn't moved back inside this channel yet. Like that. That's a bit of a problem. And it looks like 72 is a pivot as well. Or 92, excuse me. 92 is a pivot. It needs to move above 92. It needs to move inside this channel. This is neutral. Okay, that's going to be a no. No fibs can be drawn because we're neutral. But for what it's worth, let's have a look at the indicators. Momentum slightly bullish, volume neutral, RSI is bullish. Sentiment 59.41, that's neutral as well. So yeah, that's just consolidation. I mean, you don't want to trade that. It's just going to get stuck and it's going to be frustrating. All right. New Zealand dollar, US dollar. I'd love to buy it. I'd love to sell it as the US dollar. I expect the US dollar to continue to strengthen versus the New Zealand dollar. We're below the 45 period exponential moving average and all of that. But the dollar index itself is overbought and due for a retracement. And if it is going to retrace, we're going to come back before the market heads down and most probably see a bit of a shallow tip of this bearish crown. So the objective would be to sell the New Zealand dollar, US dollar, but try and sell it at a high price, maybe against this pivot at 61.50 or that pivot at 62. But yes, the probability at this point is bearish. Okay. And let's see what's happening. Momentum's bearish, volume's bearish, RSI is bearish. Sentiment overwhelmingly bearish at 9% short. Let's see if I can look for a down fib. Well, I actually can. Look at that. There was the death cross. Oh, and by the way, there's a big pattern here. A descending triangle, which is a bearish pattern. The market's making lower highs while we have a flat bottom. So expect the market to break this to the downside. Continue bearish. That's a bearish pattern. Anyhow, I want to have a look for a down fib. So there is a death cross. There's the fractals. Down AB boundary, we do have a retracement to the 5.0, and that meant that the D extension is the 1.618. It did go and hit that over there, formed a fractal, so I can draw the new down fib from the C to that fractal low. Then the market retraced also to the 5.0, so the D extension is going to be the 1.618, this one here. That is going to be the D. And that is at 53.52. The market is below the 45 EMA. So that is bearish. Let's see what we have on the 1 hour. Okay, so there's a down fib. We still haven't seen a 382. The market moved below the 127. We had formed a confluence with a pivot at 62. It's likely going to continue to that D extension. It's about 60 pips away from the D extension. And if we have a look at the average daily range, it's 49 pips if you want to round it off. So the target is more than the average daily range away. So if you want to take a risky trade, I would say that is aligned. I'm not going to do that for the main reason that the dollar index is a bit overbought. We're due for a bit of a retracement. Maybe the market will come back down, continue bearish, hit that D extension, and then we'll see a retracement. Okay. I don't know if that will happen. I'd rather not want to find out. I think I'd pass. Um, no, dollar index is not aligned. Okay, that concludes the New Zealand dollar basket as well. We have the European Central Bank on Thursday. If I had to trade the euro, I would sell it. And we basically have the euro and the pound basket left. So far, I haven't really seen anything that's standing out, on it, to be honest. I haven't really seen anything. But I hope that you're enjoying the session so far, even though there's nothing that's tradable. Let's have a look at the Euro Aussie, and let me show you how I analyze the market from a monthly time frame, how I start, because I think we have time to do a comprehensive analysis. I'm going to select the Euro Aussie here. Let's delete everything. And then I am going to change that to a monthly chart. And that's it. Okay. So you load a monthly chart and you see, you try and get as much data on the chart. And it looks like we've got data here since the early 90s. What you do then is put a horizontal line at the high of the chart and at the low And that will give you the range of this currency pair. And if you go and put a line in the middle, then you are likely going to get a pivot as well. And that is going to be at 1.65. And fast forward to where we are now, you can see how the market has been reacting against that pivot. This was COVID. As we saw risky assets sell off, the euro became a safe haven, the Aussie weakened, and that's why we got the bullish spike on the euro Aussie during COVID. But the market came back and it just continued reacting against that resistance. So it's almost like a ceiling. It's difficult for the market to move above that. So that would be the first pivot that we need to have a look at. Is there anything else here? It looks like 60 could be a pivot as well. Anything below that? 55. So this is the purpose of analyzing the monthly chart. The monthly will not tell me the direction of highest probability. The monthly will give me insight as to what is the range and where is significant pivotal levels of support and resistance, something that you would otherwise not notice on a daily chart, for instance. So now we know, I mean, there's a pivot at 60. The market's bounced against that one today. There's a pivot at 65, not today, this month. There's a pivot at 65. The market's bounced against that pivot last month. Let's go down to a weekly chart and see what's going on here. Maybe there's another one I haven't noticed. 62. Yep, look at that. 62 is also a pivot or a psychological level because the market likes to react against these round numbers. 63. I don't know. Could be 1.63. Put one at 64 as well. Okay, so that's what I can see here on the weekly time frame. Apart from that, nothing else really. 1.7 is also a pivot. Okay, let's move to the daily chart. So there's the daily. Now I can see there's another one up here at 66. And another one at 67. Okay, well, have a look at this this candlestick of today. If it closes above 63, then it's likely going to go up to 64. So it looks like the Aussie is weakening at a faster pace than the euro. And I also see a bullish crown formation. The market simply came back for the right tip of that crown. If we look at the strength chart and compare the Aussie versus the euro, you're likely going to see the Aussie weaken at a faster pace than the euro. Look at that. So yeah, I would feel more comfortable shorting the Aussie versus the euro. So let's go back to the chart here. Oof. It tested that 45 period exponential moving average today. It tested that last week as well. It needs to move above that. I do think that this one is bullish, though. I won't be surprised if we're going to get a nice bullish tradable condition unfold here, but it has to close above the 45 period exponential moving average. This probability is likely going to turn bullish soon. Um, I'd say, yeah, wait for a daily candlestick. To close above the 45 period exponential moving average. So that is still neutral, but wow, it's an interesting one. I'd like to make this one hot. You know, in the past, I put a campfire, just a little image of a campfire. Next to it. What can I put here to make it hot? Something like a lightning bolt or something, eh? Just looking for something, yeah. Uh, Okay, let's see if I can do this. Insert an image in the cell, and then I could maybe link that. Um, where is it now? Okay, that doesn't want to work. Okay, I got it. I eventually got it. There is the lightning bolt. I need to keep an eye on that. Soon to be bullish. At this point, it's a no. Yeah, I love that. That's looking good. Momentum's neutral, volume's neutral. RSI is actually still bearish. Actually neutral. It's above the signal line, but below the median line. So I'll call that neutral. Everything's neutral, yeah, but it's like screaming for a breakout. Sentiment. Excuse me. Sentiment's also neutral, 53.47. It's going to be difficult to look for a fib if we're consolidating. So that's not anything worth looking at, but I just want to see what's happening on the 1 hour. See, there is a golden cross already on the 1 hour chart. And this is that bullish crown I've been talking about. The market's already come back to establish the right tip. Let's just make that one a bit transparent. Okay. And draw the fib here. That's it. Oh, no 382. Okay, well, that's why it's not tradable, is because it needs to move above the 127 and it's converging with it. So if it moves above the 127, then it's going to go all the way up to the 2.618 at 1.6693, which is just shy of 67, which is also a round number. So from there, if it moves above that 127, that would be upside potential for 367 pips. If I go for a 2-to-1 reward to risk ratio, I can put my stop loss there at 61.39. It's been testing that 127. I'd have a look at this one tomorrow, and if it's above that level, I'd buy it to 1.6693. Let me just see. Add alert. I can add an alert here. Price is crossing the horizontal line. And Euro Aussie. I'm gonna get a alert for that. Notify me in the app, notify me, send me an email, nice one. Yeah. So it can send me an email, it will give me a notification and a notification in the app. Oh, in the mobile app. I'll also have the mobile app for TradingView. That's cool. So create that alert. Nice one. And there's a little alert, little alarm clock next to it. So I won't forget. I'll get an alert. And please watch the Telegram channel. Okay. After this class, I'll put a link to the Telegram channel in the trading room. No, yeah, access the trading room here, this locked post. Click on that. There where you see the Zoom session link and the trading session recordings. You'll see the Telegram channel here as well. Okay. All right. Okay, I like that one. Euro Canadian, that's going to be a bit difficult. If we see Canadian dollar strength, then the Euro CAD will fall. So you could see the Euro Aussie go up and the Euro CAD come down. Let's have a look at this one. Open up the Euro CAD. Let's delete everything here. Let's do this analysis from the start. Start with the monthly. Compress it till you don't see any more historical data. And then we can put a horizontal line at the high of the chart. And at the low of the chart and in the middle would typically be a pivot. Well, not entirely in the middle this time. There's one. Kind of looks like the middle, not really, but okay, so clearly that's pivotal resistance. And that is at a round number. These pivots are at round numbers always because they are psychological levels. That's 1.6. And then it looks like there's another one at 1.5. Then there's another one at 1.55. And now we're converging with this. We're converging with this pivot at 1.5. So, and if I have a look at the price action here, a couple of months ago, we got a bearish candlestick formation. That's a nice bearish shooting star candlestick formation that we had 3 months ago. And that signals bearish. So I'd trade a rejection of this this pivot at 1.5, with next support being at 1.45, which also looks like a pivot. So there's 500 pips of downside potential, selling it where we are now towards that next pivot. Oh, I also see what happened here. Looks like we had a bit of a price pattern going on here. The market was making higher lows. And higher highs, but the apex started moving together. So that was a rising wedge, and the market's broken that wedge, and it looks like it almost wanted to come back and test the backside. Wonder if it didn't do that. Look at that. Yes, came back and tested the backside. Okay. Let's move to the weekly. It bounced here against 52. There's another one here. 52 figure. And now I see there's another one here at 48. Another wedge, higher lows. Let's do this. You see, a rising wedge is a bearish pattern. The preceding trend here is bullish. So it signals a breakout to the downside. I mean, that's basically what a wedge is predicting, is a breakout to the downside. And we know that the dollar is strong and Canadian dollar is likely going to follow the euro's weak. So I think that's what's going to happen. Let's see what's happening with the daily chart. Okay, so today's daily candlestick has now moved below this pivot at 1.5, which looks like it's a big deal. Let me just see. It looks like there's another pivot here. Ugh, there's a minefield of pivots on this one. 1.49 is a round number. 1.48 is a round number. The market's got a history of bouncing on that too. So we got to trade it from the one round number to the next one. So sell it against 1.5 on a retest and then target 1.49. And then wait for 1.49 to be broken and then sell it again and then target the next one, that kind of thing. But where are we in terms of the 45 period exponential moving average? Bearish. Look at that. We closed below that yesterday, opened up below that 45 period exponential moving average today. So that is bearish. I call this probability bearish on the EuroCAD. And then indicator wise, momentum neutral, volume neutral, RSI neutral. So we're not entirely there. Sentiment neutral, 65.35. Fibs. There's a golden cross. I can't look for a down fib, so the fibs aren't applicable. Maybe I can look for a down fib on the 1 hour. No, there's no death cross. Yeah. Gotta wait for that death cross. So I'm gonna wait for the 1 hour fib to be aligned, and I think then we can start looking for a trading opportunity on the EuroCAD, but not now. We've run out of time, but I think we had another glorious session today. I had the opportunity to cover all the currency pairs that were important. The other ones I'll do on Friday. Remember, we've got the European Central Bank rate announcement tomorrow. Watch out for the Euro Aussie. I think that would be one that we could deploy or look for an opportunity. I'm looking forward to trading the US dollar strength and Swiss weakness, but the market has extended so much, it needs to retrace a little bit. It's not entirely there yet. I think we just need to be a little bit more patient. In my experience, patience. If you are patient, you will be rewarded. So just be patient. Okay. I hope you guys enjoyed the session today. Thanks for listening. Thanks for your participation. And I will see you again on Friday. Have a lovely rest of your day. Till we meet again, this is TianKriek. All of the best.